Really happy to be here. I would like to start with a quick question. Raise your hand if you've studied, advised, or worked for companies who have actually tried or have invested in future markets in the last 3 years. Probably there are a couple of hands up. If these investments made significant revenues. Thing is that, at least in my experience, normally 70% of the hands have to go down because that's often not the case, because that's a big problem, which is here in the room. I mean, the thing is, the companies, in particular medium-sized companies, but also big companies, are dealing with that problem that they are very much sticking to the core and having big challenge to move into future markets. So companies were built on a legacy from a genius founder, and now they are really trying to optimize what they have. And that is actually a big problem. So that means the question is, why? And I see 2 reasons. It's not that they have the wrong teams. It's more that they have the wrong approach. And what companies are doing or trying to do are normally 2 ways. Number 1 is they're trying to extend the core. Problem here is you get cannibalized by the teams. Number 2, chasing external trends. And how you do that? Okay, of course, you set up innovation initiatives, venture clienting, venture building, all the stuff we know, which is good, but sometimes companies tell me, hey, we have more pilots running than Lufthansa has real pilots. So now, my question is now here, what if your biggest risk isn't disruption? Your biggest risk isn't also AI taking your job, or a startup in a garage building the next big thing, or even your competitor. I think the biggest risk right now is perfecting yesterday. Why? Because many companies are trained to perfect yesterday. Even many positions, you get paid for making processes more efficient. You get paid for running the current business, and the majority of the jobs in a company is focused to yesterday. Who is an innovation manager or dealing with innovation here? Okay, a couple. If the CFO asks you, why should we invest 5 or X million in this instead of co-optimization? Often you struggle because you will telling, hey, it's an interesting initiative in the future, we will make money and so on. And CFO, of course, asks for numbers and you cannot deliver them. Of course, you can deliver business cases, but the question is how solid are them? Often you lose the budget battle because it's too insecure what's happening in the future. Next persona is the CEO. So also here, if the board asks, what's your future market strategy? You can answer, or often the answer is, we have there 12 or X initiatives running. We have this AI topic. We have this blockchain project. There's something with the metaverse. Oh, was there something? Oh, we have to look that up. Oh, there's something about the future of new work initiative, the committee we just established, and so on and so forth. And at the end, often there's not a real coherent and consistent story about really thinking about what are the future markets beyond the core. Now, a third group, which is, I think, very interesting because they can move the needle for our economy in general because they have the money, that are the investors. And also the investors are getting under pressure because it's even more difficult to find and to identify companies with really high multipliers because, of course, the markets are very competitive, and the question is, where are the future market players here? And the question is, where can you really have these high multipliers? So also for them a problem. Now, I would like to provide some solutions. 5 things. Number 1, I would like to show you why future markets don't emerge and develop from pure new capabilities, but from the assets you already have. And also how you go this direct way from your haves, how I call it, which is your DNA, which is, of course, your customer relationship, which is everything you bring to the table to the future markets. And at the end, that's my hope, even if we probably won't have so many PE investors here and CEOs, I met a couple of CEOs, but at the end I hope that you get some food, not only for thought, but food for action to win your next budget battle. And as a CEO also to have the story sharpened, and then also to increase the value of your company, and also for the PE investors in particular, how to find the targets which are strong in the core, but also which have potential to tap into future markets. A couple of examples to start with before I introduce the framework. John Deere, famous for tractors. What could they do? Of course, they can improve the quality of their machines. Of course, they do it, but that's not enough. Because they were smart, they were thinking about their assets, and their assets is also data. They have millions of data points integrated into, or actually retrieved from the sensors of their machines. And in connection with others, they could set up a business how to increase the yield of the farmers. Nike also very interesting. What they did is they said, hey, we built an ecosystem with 200 million, let's say, customers, and we gave out free apps for fitness, nutrition, and health, and try to integrate our clients and bind them and lock them in. And then we can sell them directly our shoes. And a very interesting example is also Shopify. Because Shopify, it's maybe not that known for that what they are doing, but of course they are an e-commerce platform. And normally they charge a fee for the stores or the people who want to sell stuff. But they said, hey, with our assets, we also can move into the financial services business. And now we can charge 1% of every transaction. And then, of course, this really increases the potential what they can make within their ecosystem and within this new market. So the old market was e-commerce. The new market was or is, in addition, financial services. So we have here same assets, different model. And the thing is here that I think the future rarely evolves from the new capabilities you have to acquire, which is often also a challenge. It emerges from what you already have. Because what I have seen in the last few years, and I've been doing this job now for the last, let's say, 10 to 11 years, and of course in the research, it's more practical-oriented research. It's that I look at the world from a perspective very practical-driven, with interviews, having many conversations with C-levels, almost like 5 to 10 a week, and trying to gather what's going on. And also working together with some of these organizations and going deeper into them. And so what I have seen when it comes to future markets, it's 3 things. My lens, very simple. I have 3 layers, 3 questions, and you need to find the right match. So layer 1 is the haves. That is, what is already there? As I mentioned, that's the DNA, that's our customer relationships, that is IP, and so on and so forth. Second, you have the core markets here. That is, where do you sell today? That is actually the money you are making. You can invest into future markets, but you also can just leave them there and increase further the efficiency or the product innovation within the core. And then you have the future markets. That is what you will shape. That's your potential. The problem is in organizations is that this understanding of really bringing these haves into the future markets and to make bold moves, not nitty-gritty innovation initiatives, and then to really find the right match. And then, of course, to find the partners, and there we are in the ecosystem, who can help you to create a solid position in these future markets. Future markets hide in all that your company has, not what you sell.